Hi friends, welcome to the mini marathon on module C and D RBWM. Yesterday all of you have seen module A and B, right? All of you. If not, kindly go back. It's available in the playlist on Officers Adda 24/7 English channel. It's available there. So if you have not seen this earlier one, kindly go back and go, because here in that also I have taken almost 2.5 hours. Yeah, almost that. Many questions, case studies, some important theory regarding that Sukanya Samriddhi. So don't miss it. Join, check that also, and watch this video till the end. Share it with your friends, share it on all your social media platforms, like the channel, subscribe to the channel, click on the bell icon. Okay? So let's start. Okay, let's start with the big bang. Let's start with a case study which comes in the exam. Regularly, every exam it will be there. It's on depreciation. Say this depreciation, this case study. Okay, the cost of a two-wheeler is 70,000 and it's purchased and its salvage value is 10,000 at the end of 6 years. The amount of depreciation of two-wheeler for the second year under the straight line method is, now look at this, it's asked for straight line method, but I'll solve it for both straight line also and WDV also. See here, firstly everyone understand, in your RBWM, you have only, the thing which you have is only this, what, straight line and WDV. You don't have those. In accounts you had na AFM, straight line, WDV, then sum of years, right, accelerated depreciation. Here nothing, simple, only two, straight line and WDV. Okay, so let's solve this using these straight line and WDV. So let's write this one by one. Okay, yeah, so let's write this one by one. What is given? I'll make it into two parts. One is straight line, second is WDV. Okay, as it comes in the exam, first straight line, straight. Okay, and second is WDV. See this WDV, written down value. Okay, then it has many names. What is the basic difference between straight line and WDV? Okay, let's first sort out that. What is the difference here? Straight line is like that simple interest. Simple interest. Okay, simple interest. You have that PNR upon 100. Simple interest. And this WDV is like the compound interest. Interest on interest. Okay, compound. So that is the logic. Compound interest. Only the difference is, look at the differences. In compound interest, you do plus. What is the formula for compound interest? A equals to P into 1 plus R raised to N, right? You do that in compound interest. Instead of plus over here, you do minus. That's it. Remaining everything is same, because it's after all the same, depreciation on depreciation. What is the important point about this straight line method? In straight line method, kindly note here. Now I am going to tell you something very important. In straight line method, depreciation amount, okay, I'll write it over here, depreciation amount. Okay, so this is constant over here. Depreciation amount is constant. Okay, and here depreciation percentage is constant. Percentage constant. Okay, here depreciation percentage, that is changing over here, changing. And here depreciation amount, that is changing. Kindly note this basic logic, amount change. Okay, so that is the main difference between the two. This you have to very clearly understand in this. Okay, now one more question comes always, how to find out the percentage depreciation. So one more point here, I'll cover everything in this case study now, even though it is not asked in this question, but I'll cover that. Important point, look at it. In straight line method, you always can find out the first year percentage. See here, first year percentage of straight line is equal to 100 upon life. 100 upon life. Whatever is the life, you divide it by, means 100 you divide it by that life. So here it is 100 upon 6. Okay. So the first year percentage is 100 upon 6. So 16 6 something, isn't it? 16 point, it will be something 66, isn't it, roughly? So 16.6 is the first year percentage. Second year it is going on changing. See, what did we say? In straight line the percentage is changing. Only in first year you have 16.6. Now about the WDV, this remains constant throughout. Constant. So here all the years the percentage will be 16.6. In this case, only in this case I am talking. Amount will change. Got it? The basics. These were the basics about the straight line and WDV. You must be very clear in this concept. Okay. Now let's solve this numerical. What is given? One more point which is remaining. In straight line, this salvage value has importance. 10,000. Salvage value important. Okay. Salvage. It is important over here in straight line. But in WDV, it's of zero value. No importance. Zero value. It has no importance. Okay. In WDV, salvage value. Because you will never get the salvage value. Okay. Now let's solve this numerical. This is very easy. If you understand these basics, now the numerical is very easy. See, the amount of depreciation of the two-wheeler in the second year. Now you want amount. What did we say about the amount? Amount is constant, right? So amount will be the same. So what is the amount? See this. Amount equals to depreciation amount. Kindly note. Depreciation amount equals to what? Cost, total cost minus salvage value divided by, okay, cost minus salvage value divided by life. Okay, whatever is the life. So what is the cost? Cost is given as 70,000. So 70k I'll write it. Minus salvage value is what? 10k, right? 10k upon, what is this? 6. So 70, 60 is this 10k, isn't it? 60 upon 6, 10k. So 10k will be the depreciation amount for any year. Let it be asked for second year, third year, first year, sixth year, any year. It is same. Okay. So this is your answer using straight line. Now if I do the same using WDV, what will I do? See here, I'll use this formula. A equals to P into 1 minus R raised to N. In WDV, you always get A. A means the remaining amount, salvage value, remaining salvage value at any year. Now in WDV, how do they ask you the question? The question will be like this. What will be the total or the remaining value, salvage value after, let's say, second year? They'll ask you this question. So salvage value after second year will be what? Here, it's like this. It's the same formula, A equals to. So salvage value after second year. So it will be what? P into, what is P? My cost, 70,000. 70k into 1 minus, what is R? Do you know the R over here? We have just now found out 16.6, isn't it? 100 upon life. That's why this formula is very important. 100 upon life. So minus 16.6%. So I'll just make it 0.166, isn't it? 16.6 upon 100. So 166. And how many years I want? Second year. So 2. Do the calculations now. It's simple. So that is the salvage value. Okay. So 70k, are you able to see this? No, one sec. Let me write it over here. Okay, this side you will be able to see it. So 70k into 70k into 1 minus, what is this? 0.166 raised to 2. Okay, second year. If they ask you for third year, raised to 3. Fourth year, raised to 4. Whatever it is. Okay. So what is the answer for this now? Everyone. What is the answer? Get it fast. On the calci. Give me on the calci. Normal calci. Try it on the normal calci. So 1 minus 0.166, right? So the answer is, for that is 0.834 first. Raised to 2. How to do raised to 2? Into equal to. You do it 2 times. Equal to. You press it 2 times. Okay? equal to, right? So you'll get this as 0.58. Are you getting this 0.58? Everyone, are you getting it? 0.58? Two times what you have to do it. So 0.58 into 70,000 now. So into 70,000 into 70. 1, 2, 3. So what is the answer you are getting? 4606. Are you getting the same? 4606. 4606. Okay, this is your salvage value after the second year. Are all of you getting this? Yeah? Kindly check it. 4606. Everyone must get this. One, I'll again, well, let's do it again. Let me see how many of you are answering. Minus 0.166. One second. 0.1 minus 0.166. So you'll get it as 0.834. That 0.834 square. 0.69 I'm getting. 0.69. So 69. So it is 0.69. Okay. That's what I said. Always recheck. Okay. So 0.69 I'm getting. 0.69. This is your 0.69 is the answer for the square multiplied by 70,000. So into 70. 1, 2, 3. Okay. 70,000. So 48,688. That is the right answer. That's what. Good that rechecking is done. Always in your exam also for calculations do the rechecking, because what happens, we are in our calculations and we are in a means in our own mood of solving the paper. What happens, many a times we make certain minor errors, but because of that the marks are gone. So that's why try this your own, try it your own, everyone. Okay, always remember calculations should be done by each one of us separately. Okay, because after all in the exam we have to solve the paper. Okay, now let's solve some theory questions. Case study done. Now let me solve remaining all the theory questions. Many of them are there, but before that, subscribe to Officers Adda English channel, everyone. Click on the bell icon. Okay, now some of you might be planning for the next session of your exams. Means this session is done. Some of you might have some one subject remaining, two subject remaining or something, or somebody might have been planning for the next session directly. So for that, the new batches are starting. I'll show you at the end how to join this. Also join the Mahapack. Okay, this Mahapack is the best important thing for you. You'll get multiple batches in this. I'll give you at the end everything. Okay, let's move on. Banking products like recurring products, FDs, life insurance products, endowment products with low premium comes under the category of which of the following? Following needs: security, safety, social needs, esteem, and self-actualization. So look at the question first. Recurring, FD, life insurance, endowment with low premiums. Here, this is the main point over here. Low premium. Come under which? Now, what do you mean by these needs? Those who don't know, we are talking of Maslow's hierarchy. Okay, Maslow. I'll write it over here. Maslow's hierarchy. Okay, Maslow's hierarchy is of has how many parts? There are 5 parts in this. Okay, starting from lowest level, physiological. Physiology, I'll write it. Okay, second one is safety. Then third one afterwards comes is the social needs. Then comes esteem, and last one is actualization. So these are the 5 levels of Maslow. Okay, and we divide our products as per this hierarchy so that we can pitch the right product to the right customers. Now here, what do we mean by this? Low premium ones. Low premium. So who is at the lowest level? It's at the physiology level. So is there the answer of physiology? No. Go to the next level. Which is the next level? Safety. Is there the answer of safety? Yes. So it will come as A. Safety, security. Okay. So safety, security, then comes social needs, then comes esteem, and then comes Actualization. Actualization is at the last always, okay? Because that is the senior most level. Because actualization means that person who has already gained everything. Now he is almost on the retirement stage. That is known as actualization phase. So generally we have these retirement products for these guys for the actualization phase. For esteem products, esteem ones, we have those high-end products like Mercedes car, 4 BHK in metro cities. Okay, these are all for these guys. Okay, so this safety, security, low premium. See here, safety, security person will is just about the physiological. What is a physiological person? Physiological person means that person who is just having enough to run his daily life. Safety means that person at that level where he is just above this person. He is about means he is able to save something which this person is not able to. Okay. Next one. Banking products like special term deposits products, term insurance products, second housing loans, improvement home decor loans come under the category of which of the following needs? Now say a similar one. So special term deposits. What do you mean by special term deposit? These are the term deposits with the highest amount. 1 crore, 5 crore. There are persons who can put that much in the FDs. Huh? We can't imagine that even, right? But there are persons who can put these much amounts in the FDs. Term insurance products, second housing loan. Second housing means that person who's already having the house now is buying this for just investment. There are persons who are buying third housing also, second, third, many houses. Improvement home decor means this is a commercial loan. This does not come under the category of home loan. Remember, this is a commercial loan. Okay, it does not come under the category of home loan. Okay. So this comes for which category? Safety, security, then social needs, esteem, and actualization. So it will come for esteem needs. Esteem. Okay, the fourth level. Got it? Okay, let me show you this fourth level. Say this esteem. This person is having huge money and he is just going up, 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 and still up. Okay. So esteem needs. Next, banking products like pensioners loans, retirement solutions, pension plans in insurance, senior citizens term deposit products come under the category of which of the following needs. Now look at this: retirement solutions, pension plans. Now this is quite simple, isn't it? It will come for which category? Everyone answer this. Comment section. Fast. This will come under which category? Fast, fast, fast. It will come under last one, isn't it? Senior citizen. Look at this: retirement, pension. So this will be self-actualization. Last person. Customer requirements and services like appearance of physical facilities, equipment, personnel, communication, materials, etc. comes under the category of which of the following? So what is this? Appearance of physical facilities, equipment, person means how your staff is placed, how your staff is speaking to the persons, to the customers, how your staff is dressed, what is the overall furniture of your branch, is it clean, is it painted well? So these are all appearances. So these come under which of the categories? Tangibles, reliability, responsiveness, and assurance. They will come under which category? Tangible, correct. They will come under tangibles, because what is tangible? Tangible means something which you can feel, something you can touch, okay, which is seen. Anything of that sort is tangible. Okay. Customer requirements and services like competence, possession of required skills, knowledge to perform services, courtesy, politeness, respect, considerations, friendliness, all these come under which of the following categories? Means your staff. This is regarding your staff. If your staff is courteous to the customers, courteous means the staff is understanding the problems, empathetic, polite. So that will come under which one? Tangibility, reliability, responsiveness, and assurance. Tangibility already told, so that is out. Okay, reliability, responsiveness, and assurance. It is comment section. Comment section. Everyone in the comment section. The answer is C, responsiveness. How do you respond to the customers? See here, everything over here comes under the responsiveness. Respond. Competence. If you have knowledge, then only you can respond properly. Right? Courtesy. If you are polite, if you are courteous, then only you can respond properly to that customer. And the customer will be coming back. Friendliness. Right? You should always be easy to deal with. That's the main concept. Here, there are three concepts. Reliability. Respectful. You should always be respectful. Means you should have knowledge. You should be easy to deal with. And last one is you should be dependable. Dependable means whatever is told to you must be done. Okay. Among the following, in which of the given stages the sales volume of the product picks up and the product is likely to break even, start generating profits for an organization? Firstly, what are we talking of over here? We are talking of, what are we talking of? We are talking of PLC, product life cycle. What is PLC? Look at this. This is PLC, right? This is the sales, and this is the time, right? As the time goes, time. This is time on x-axis, sales on y-axis. This is like this. It goes like this. This introduction, then growth, then maturity, then decline, right? This is a product life cycle. This is introduction, intro, okay, intro. This is growth. This is growth. This is known as PLC, product life cycle. This is maturity, maturity. And last one is decline, okay? Got it? So now, getting this, these are the four levels. Here I'll draw it over here like this. Got it? So remember, introduction means you are introducing the product to the common market. People don't know your product. Like Jio did. What did Jio do? Jio Financial Service. 2016 it came. In introduction phase, it gave free for first 6 months. It gave free, right? So that was the introduction phase. Then growth, it starts generating profits. Now what is the question? Look at it. Don't lose the focus on the question. The sales volume of the product picks up. Where does it pick up? And product is likely to break even. Break even means what? What do you mean by break even? No profit, no sales. Means whatever is my cost equals to my profit. Okay. So no profit, no loss. I have recovered my cost. So that is known as break even. So in which phase do you think should it break even? Introduction or growth? Okay, I'll give you two options only. Introduction or growth. It will pick up in, what do you think? Which stage? It will pick up in growth stage. Okay, growth stage. Remember this, growth stage. In maturity stage, the sales are at the highest. Also remember, there is a graph of profits also. I have not drawn this, but there is a graph of profits also. Profits also move in the similar way. In introduction phase, the profits move like this, lower. In growth phase, they start growing like this. In maturity phase, they grow up to the maximum, and in decline phase, they start growing. See here, introduction will have negative profits. Growth, they'll start growing up. Maturity, maximum profit. See this, maximum. So maximum profit also, this is profit curve. Okay. And this is sales curve. This is sales curve, sales. So at the maturity stage, there is a maximum profit also and maximum sales also. Okay. But in growth stage, it has started growing and it is reaping the benefits. It's earning you the profits. So chances of break even are in growth stage. And decline is what? This stage is known as decline actually. Decline. Okay. So this stage is known as decline in the PLC, product life cycle. So this decline stage means the product, it goes on decreasing. Sales go on decreasing and profits also go on decreasing. So here the product is either replaced, removed, or there is another chance. What do? We can improve some enhancement in this so that it again moves up. Other chances. That's a separate topic altogether. It's a big topic. Among the following, which of the following given below, which of the following is are not, look at this, not the components of wealth management? Not the components of wealth management. A consultative process, a customized choice, right? Customized choice and solutions. Then which one is the next one? Customized choice and this. Then let me make this proper. Hold on. Yeah, now it's okay. So consultative process, customized choices and solutions, delivery in close consultation with your clients, and all of the above. So which of them are not the components of wealth management? Not. See here, consultative means what? You speak to the client, discuss with your client. Discuss means what? If you are giving something, if you are selling some product, insurance product to the customer, discuss whether that customer really requires that product. If you are selling a mutual fund, discuss whether that requires. Selling a housing loan, discuss with that customer. That is known as consultation. So it's not a component of wealth management. This is false. It is a component. Okay, we want not a component. Okay, so okay, I'll write it in proper way. We want false answer or wrong answer. False, I'll write it, and this is true, let's say. Okay, so this is true. This is a component of wealth management. Customized solutions and choices and solutions. This is also true because every customer requires the solutions as per his or her requirement. Delivery in close consultation with your clients. That is also true. Whenever you deliver any product, whenever you sell any product, for example, housing loan. When you give a housing loan to anyone, you must first see what that client actually requires. How much loan does the client require? What is the requirement of the house of that client? Otherwise, what happens? Just to meet my target, I'll sell the higher housing loan to that customer with a higher amount. Definitely that will be NPA some days, right? So that's why we have to focus on the requirement of that client in consultation and bring the solutions accordingly. So delivery in close consultation. So that is also true. So which of them is not the component? This is the answer. It's actually the answer is none of the above. Okay. So which of them is not? I'll write it none. None of the above is the answer. Okay. So all are the components of wealth management. All. Okay. Among the following given statements, which one is incorrect? Again, look at this. Incorrect means you want false answer now. Okay. In context of wealth management. So you want false answer now. Let's see one by one. An industrialized wealth management process involves only counseling to clients to better manage their financial circumstances and or more effectively develop the opportunities in their financial lives. So it involves only counseling, okay, to the clients to better manage their financial circumstances. Circumstances means financial status. What is the present situation? That is number one. Wealth management advisors offer the clients solutions designed to fit the full range of each client's needs. All the needs of those clients should be solved. That's what we try. We should always try. Okay. Wealth managers provide their services by working closely with clients on an ongoing basis to identify their specific needs and how these needs change over time and design solutions around these needs. Think over it. See here, do we work closely with the clients in this? Last one. True wealth managers continue to help their clients make smart decisions regarding their money over a period of time. So is this true or is this false? That's what now you think. I'll give you some time for this question. Because this question is really important. I'll give you some time for this. Think over it. Read everyone. All of them seem to be true. All of them. All of them seem to be true. Isn't it? See here. This seems to be true. What? true wealth managers continue to help their clients make smart decisions regarding their money over a period of time, isn't it? That's a job. That's a job in even in banking. We must always try to help the client to make smarter decisions so that the client benefits. Wealth managers provide their services by working closely with the clients, isn't it? On an ongoing basis, continuously. Once done is final and gone. It's not that way. Okay. Identify the specific needs and how those needs change over time. See, this needs change over time means if the person who's requiring a home loan today will be requiring a home decor loan after 4 years, right? Because that person, once the house is built and done, that person will be requiring a decor loan, right? That person will be requiring some other mutual fund products, some insurance products. So that is also true. Now we want focus on this false. We want false. Wealth management advisors offer their client solutions designed to fit the full range of each client's need. So we must always try to get the full range as much as possible. So that is also true. That also seems to be true. Wealth management process involves only counseling to the clients to better manage the financial circumstances and more effectively develop the opportunities in their financial life. So this also seems to be true. So which one is false then? This is false. Why? Because of the word only. See here, wealth management does not mean only counseling. Only counseling means I'm just talking to the client, do this, do that, do that, do this, and I'm not giving any solution. Am I a consultant? No, right? My job is to give the solutions also, isn't it? So this is false. Got it, everyone? So this one is false, very important one. Otherwise, what happens? All seem to be true, all of them. Okay, clear? Chala. Next one. Among the below mentioned formula, which one is correct? Means correctly explaining the wealth management. So formula means this is a general formula. It's not that any hard and fast formula is there. Okay, it's a general formula, logical formula derived. Wealth management equals to investment consulting minus advanced planning plus relationship management. Investment consulting plus advanced planning minus relationship management. Investment consulting plus advanced planning plus relationship management. Investment consulting minus advanced planning minus relationship management. So what is wealth management? That's why I said it's not a formula. Otherwise you'll say, sir, a plus b the whole square, a square plus 2ab. That's a formula. This is just a logical definition given over here. Okay. So what is the answer for this? Obviously this, isn't it? Wealth management includes everything, isn't it? It encompasses your investment plus advanced planning. Advanced planning means planning for the future. Various stages are there in the life of the human being: transition phase, wealth accumulation phase, retirement phase. So planning right in advance. Third is this relationship, right? Without relationship, how can you work? If you're not in a consulting mode with the client, you can't give the right position to the client, right solution to the client, isn't it? So basically it means you have to encompass everything, all of these. Okay, got it? Next, Dash addresses 4 key areas of financial needs that the clients have beyond investments: wealth enhancement, wealth transfer, wealth protection, and charitable giving. So Dash addresses 4 key areas of financial needs. 4 key areas. Now beyond investment. Beyond investment means here, I'll tell you simple logic. For normal persons like you and me, who earn hardly up to 1 lakh max to max. Okay, nowadays everyone in the banks, I would say at the lower level, we generally earn up to max 1 lakhs or 1.5 lakhs. Our goals are not that wealth planning or wealth protection, wealth transfer. Our EMIs are so big that you can't even think of wealth planning, right? Whatever salary comes immediately in 3 days, it's gone, right? Nowadays it's so fast. All these EMIs and all these standing instructions are so fast. Salary day, 3 days, gayab, everything gone. So, wealth enhancement, wealth transfer, wealth protection, charitable giving. So, beyond this, these are beyond. So, what addresses this? Wealth planning, investment consulting, advanced planning, and finance planning. So, which addresses these issues? These four which are given above. Who addresses these issues? Isn't it? What just now I told you about advanced planning. There are various phases in the life of that person, right? Many of us are in this transition phase. I'll come to those phases later. Transition phase and wealth accumulation phase, then giving phase means wealth transfer phase. Wealth transfer means to your near and dear ones. This is generally at the age of above 55, 60. Okay. So this is advanced planning. Advanced planning is a concept which looks in advance about how to transfer the wealth. It includes everything then. Will writing, right? Then executor, everything. Got it? See here, investment consulting is what basically? See here, wealth consulting, investment consulting means what? Core offer for many wealth managers and the foundation upon which they build a client relationship. So here we have to focus. Relationship means what? We have to focus on all the needs of that client. Today's needs plus future needs. So that includes advanced planning, isn't it? So that's why they address the four key areas. Always wealth management is not only about investment management. It addresses four key areas: wealth enhancement, wealth transfer, wealth protection, and charitable giving. These four areas are addressed. That's why I said this is not for you and me. This is for those who are having 2,000 crores, 10,000 crores in their bank balance, right? You and me don't have it. Okay, so move on. Chalo, we have to clear your JIB. That's it. Among the below mentioned processes, which one doesn't belong to the group of processes formulated for wealth management? So look at this. Now always focus on what is the question, negative or positive. Here it is negative question. Huh? Always first thing you must always look up in any question is whether it's positive question or negative question. What are they asking? So doesn't belong to the group. Analyzing the opportunities and challenge, surveying, identification of needs, defines the terms of engagement. So which one doesn't include the processes formulated for wealth management? Think of it. Give me the comment section. Comment section. Yeah. Give me the comment section. Answer is surveying. Surveying is not a part or does not belong to the group of processes for wealth management. Okay, it doesn't belong. So you'll say then what belongs? If that doesn't belong, then what is the actual concept? See here, wealth management has various processes. Process means it's a single process, but it has various steps. Okay. During the initial meeting, we with the client, okay, we first present the terms of the business and explain how it works. Generally, whenever we meet the client for the first step, there are total 6 steps. 6. Okay, 6 steps. One is data gathering. First, gathering all the data. I have taken this separately in my YT series. Data gathering. First is that we first gather the data of the client, understand what the client, what is the means present situation of this client. Okay. Then second one is goal setting. Goal means we have to set the goal first. Then means where you have to go after, let's say 20 years, 30 years, 40 years, whatever. Wealth management is for longer term. Always remember. Data gathering, goal setting. Then defining the terms of engagement means what will we do, what will the client do. See here, after all, it's a commercial relationship. Okay. Then defining the engagement. How long will we engage with that client? What all will be the fee structure? After all, here we are working for this, so we'll be requiring the fees. Identification of the needs. Okay, identification of the needs means what does the client actually need in the longer run. Then report preparation. Report. Okay, And last one is this opportunities and challenges. Means we agree to solve these opportunities and challenges to the client so that the overall uh, process goes well. And there's one more step. This is implementation, very important one, because implementation is something which we always forget. We do all the planning, we do everything, this, that, thousand things we do, but implementation, devil lies in the details, right? So devil lies in the implementation. While implementation, there are so many quarrels or fights with the client many a times. Okay, so that's why implementation you have to always look at it. Got it? That is the key area which we always lose on. Okay, next. So surveying is not the part of this. I give you all those 6 7 steps. Surveying is not the steps, one of the steps for this formula for wealth management. Okay, dash generally defined a private individual, generally defined as a private individual with more than USD 1 million or rupees 7 crores as investable assets. So who is this guy? USD 1 million. USD 1 million means 1 million is 10 lakhs. Okay, so USD 10 lakhs. The person who is having above USD 10 lakhs. So now it won't be 7 crores. Now it will be 8.3 crores because the rate is changed. 7 crores was based on the rupees 70 rate. Now the dollar is at around 83. Okay. So this won't be 7 crores. This will be different. Important is this USD 1 million. So that person is known as, is it called as HNW, high net worth individual, or ultra high net worth individual, or low net worth individual, or middle net worth individual? Now you'll always get confused between A and B. High net worth individual and ultra high net worth individual. You'll always get confused. So the answer is high net worth. Okay, I've explained this in earlier one of the questions, all that classification. Okay, so here USD 1 million is high net worth. Ultra high net worth means more than USD 30 million. More than USD 30. Okay, let me write it. High net worth is up to USD 1 million. Okay, or you can call it not up to, actually it's more than. It's more than $1 million, not rupees, dollar. This ultra more than 30 million. 30 million, not a joke. 30 million means 1 million is 10 lakhs. So 30 million is what? Okay, huge. We can't even write the zeros of this, isn't it? 1 million is 6 zeros. Always remember. What is 1 million? 6 million. US has a very simple system. See this. Their system is like this: thousands, million, billion, then trillion, and last one is zillion. That's what they called it. That much. So here 3 zeros, zeros. Okay, 0. So here 3 zeros, 6, 9, 12, and 15. So that's the system. So when I say 3 million, 30 million, so 30 and then 6 zeros. That's what it means. Okay. So next one. Financial planning seeks to offer investment advice, offer tax advice, assess the transmission plan, assess the adequacy of income and assets of the needs. So what does this financial planning do? Is it only telling the customer do this, do that, and that's it? Right? Only investment advice. Invest. I don't know anything. You invest. I'll tell you, invest in this, that, that, that. I won't do anything. Is it that? No. Okay. Financial planning is basically look at the options first, isn't it? First, let me get the answer from you. Offer investment advice, offer tax advice, assess the transmission plan, assess adequacy of income and assets for the needs. So which seems to be the right answer? This, obviously this, right? Assess adequacy of income and assets for the needs, isn't it? See here, all these A, B and C, whenever you consider D, A, B and C are the part of this D, isn't it? So this is a more comprehensive, right? All inculcative, comprehensive. It combines everything. So financial planning seeks to not only give him the advice, but offer this tax advice, tax planning also, give him the right products also. Okay, so financial planning is not only about consulting. Okay, so what is the definition now? Financial planning. Anyone knows financial planning? It's a systematic approach, okay, whereby an individual maximizes the existing financial resources through proper management of one's finances to achieve the goals, whatever goals that person is having, right? So systematic approach, again get it, systematic approach, okay, maximize the existing resources and then further returns. Return means after all the goals, whatever your goals are, right? So financial planning is a task of determining how the business will afford to achieve its strategic goals, right? How can we afford? How can we move? What will be the problems, right? Move on. Next one. In today's money terms, the investor needs rupees 20 lakhs. The goal is likely in 6 years with an inflation of 10%. Then the future requirement of the funds for the goal is. So what is the future requirement of the funds? So basically what are you requiring? You are requiring the future value. How this investment? See here, there are two types of investments, right? One is, I've taken this in RBWM separately, paid classes. One is lump sum, right? And second one is what? This annuity, right? Annuity, again, it has two types. Now I won't be going into details for this, okay? Two types, what due, and second one is what, that ordinary, right? So these are the two types of investments. So here 20 lakhs is invested one time only. So this becomes lump sum. So the formula for this will be lump sum only. What is the formula for this lump sum? Anyone? Write in the comment section. You can write it. I know it. You can definitely write this formula in the comment section. Compound interest formula. What is the compound interest formula? A equals to P into 1 plus R raised to N. Isn't it? Today's amount principal into 1 plus R raised to N. Got it? So investor needs 20 lakhs. See this, needs. So this 20 will come where? Where is this 20? Is this 20 over year or is this 20 over year? P. Needs. Whatever is needed will be at the end. So 20 will be over year. Here some other P. Now this is assumed. Here. This is assumed 10 lakhs. You will say, how did we get this 10 lakhs? Assumed. You can write it 12 lakhs also over here. Only the point is it should be less than the A. It should be less than 20 lakhs. Of course, the calculations are right or wrong. That's not a question over here. Understand, the question is not whether this answer is right or wrong. The question is how to write it. That's the question. So yeah, actually it should be 20 equals to this 10 it's given. So 10 into 1 plus what is our rate of interest? 0.1, right? Raised to N. What is N? How many years? 6 years. So 6 annually. So here check the answer which is having this answer. So 10 into, see this, 1 plus R. R is 10%. So 10% you can take it 0.1 also. This you can write it as 10% also. Actually while calculations you write it 0.1 only because we have to divide this by 100. So the answer will be B, isn't it? 10 lakhs into 1 plus 10% raised to 6. Here again I am saying the answer might be wrong. If you do this 1.1 raised to 6, multiply 1.1 into equal to 6 times and then multiply by 10 lakhs. You might get a wrong answer. You might not get 20 lakhs because I said the question is not about getting the answer. The question is writing the answer, means writing the steps, process. Okay? Got it? Everyone clear? Move on. Next one. Which of the following statements are correct? Statement 1. In early stages of one's career, the client is in the transition stage. Transition. See here. What did I say? Transition. Just now I gave you in one of the questions. Withdrawal plan is suitable for retired investors. So withdrawal plan is suitable for retired investors. Okay. So which one of them is correct? Both the statements are correct. Only statement 1 is correct. Only statement 2 is correct. None of them are correct. So what is the answer over here? Think. Yes. The answer is C. Only statement 2 is correct. Only statement 2. Okay. Sure. Statement 2. Why statement 1 is wrong? The client is at the transition phase. Here in early stages, you always go on accumulating. Transition is next step. Early stages means we are talking up to 30 years. You go in accumulating more, this, that, this, that. The client is in the accumulation stage. This is due to the income and the expenditure. Means you might have done your studies, spent a lot on your education, right? Then you need to accumulate, vasuli, right? Surplus is more in the early stage of one's career due to limited wants and expenditure. Individuals' expenditures are less. So whenever you are in the accumulation phase, means before the marriage generally, isn't it? Your expenses are a bit less if you don't have any uh, means any habits. Okay, then you can have definitely surplus, right? Because the expenses are limited. After you get married and you come to the transition phase, then all the expenses start. So surplus is more in the accumulation phase. As the income through the pension is constant low, marginal increase due to dearness allowance and all these. Systematic expenditure to systematic withdrawal plan is okay for the retired guys. Okay. See, a systematic withdrawal plan is always good for the retired investors. By withdrawal means what? Withdrawal plan means what? They have the corpus. Now they have to enjoy their life. Withdraw it, isn't it? That's it. So that's the way it is done. Got it? Which of the following best defines the bottom of the business cycle? Best defines the bottom of business cycle. Now understand this. What is the business cycle? See, this is a business cycle. I'll draw it over here. Start from here, move here, then down, here, then down, and then it goes on repeating. So this is known as, see, this is known as peak. Okay, peak, P-E-A-K. This is known as trough. Okay, trough. This is known as recession. This is recession. Now this trough is also called as depression. Okay, remember, this is also called as depression. It depends on book to book. Actually, this peak and trough are the scientific languages. In sine wave and cos wave, we have this trough and peak. Those who are engineers, they'll understand this. Okay, so recession, depression. Okay, then afterwards what happens? Year from year we start the recovery. This is a recovery phase. Recovery. And then we have again prosperous phase. Okay, means growth, you can call it growth. So what is the question? Best defines the bottom of the business cycle. Who defines the bottom of the business cycle? This trough or depression. So the answer is this. Okay, this is the answer. Got it? Now what we'll do? We'll move on to our branch profitability questions. Okay, because those are also very important. All this, you'll see this, all the questions of this leverage ratio and all ROA, ROE. Okay, let's move on to that. Okay, sure. A firm with a high net margin effectively controls both its running and non-operating expenditures. So here it's a full stop. So it controls both of them. Okay. Now the next question is, what happens if dash might be the result of low income from loan interest payments. Now what do you mean by this? Now actually looking, these two sentences are totally separate. They are not at all related to each other. This sentence is saying is not related to the second one, and such questions you can get it in exam. Simple question is, dash might be the result of low income from loan interest payments. So if I get the low income from loan interest payments, what might reduce in my bank? That's a simple sentence or simple question. Decrease net margin, increase net margin, greater gross margin and lower gross margin. So what can it decrease as such, or what can it increase? So logic is very simple here. If I'm having loan interest payments, right, In the interest which I'm getting on the loans. If I'm getting the interest lower, earlier I was getting at 10%. Now let's say I'm getting it at 7%. If my loan rates decrease, then what will happen? Simple, my net margin will decrease. Decrease net margin, isn't it? Because my profit will decrease, net profit will decrease, right? It directly affects my net profit. So decreased net margin will be the right answer over here. Okay. Among the below mentioned statements, which of the following is incorrect statement? You want incorrect now, not the correct one. Profitability is correlated with the balance sheet size. Only two large banks figure in top 10 banks ranked in the terms of profitability, although as a group, smaller banks exhibit wider dispersion of profitability compared to a larger peers. Banks with profitability greater than or equal to average have relatively lower share of assets in the corporate or wholesale banking vis-a-vis the rest. So all the above sentences are correct. So which one is this? Now it's a tricky one. Is all the above sentence correct? Or here, firstly look at the sentence. Okay. Profitability is correlated with the balance sheet size. Now understand the term profitability and profit. Profit means net profit or gross profit. So it's an absolute number. Profitability is a relative term. If I'm having a, suppose let's say I have a profit of, let's say this, my firm, my company is having a turnover of, let's say 10 lakh rupees turnover, 10 lakh rupees turnover, TO, okay, and then I'm having a profit of, let's say 1 lakh rupees profit, okay, profit. So will I consider my company as a good company? Yes. Why? Because 10 lakh turnover and 1 lakh profit. Now tomorrow Reliance comes up and Reliance says that my profit is 1 lakh rupees. Understand this. Reliance says my profit is 1 lakh rupees. 1 lakh. Okay, Reliance is saying this now. Will you consider this Reliance then as a good company? No. Why? Because what is the turnover of Reliance? It's unimaginable. Okay, let's say this turnover of is 1000 crores. Let's say this minimum I'm talking, it will be much higher than this. So 1000 crores is the Reliance turnover, and now it is saying it is having a net profit of 1 lakh. So will you say Reliance is good company or my company is good company over here? So definitely you'll say this company is good. Why? Because the turnover is 10 lakhs and profit is 1 lakh. So that's why profitability is correlated with the balance sheet size. So this is true statement. What about the others? Only two large banks figure in the top 10 banks ranked in terms of profitability. Although as a group, smaller banks exhibit wider dispersion of profitability compared with the larger peers. This sentence has no meaning at all with each other. See here, this is separate sentence and this is separate sentence. Okay, only two large banks figure out in the top 10 banks ranked in the terms of profitability, although as a group. So firstly, is this statement is correct or not? And it's not a valid statement as such. Today there are two large banks. Is it a universal truth? Do you know the exact figure? So this sentence is false because you don't have the data over here. Suppose if you want to consider any statement as true or false, you must have some data over here. Okay, smaller banks exhibit wider dispersion of profit. It's not that. Smaller banks will never exhibit wider dispersion. Dispersion means spreading. Smaller banks will have lesser dispersion because they will be having lesser products. Okay, so this statement is false. Banks with profitability greater than or equal to average have a relative lower share in the assets in corporate or wholesale banking vis-a-vis the rest. Now, can you say this? Means you mean to say that, means, or the question means to say that if I want higher profits, I need to reduce my corporate or wholesale banking and I need to focus more on retail banking if I want to increase my profitability. That's not the case. It depends on bank to bank and the business model, right? I can have a corporate bank with a higher higher profitability. I can have a retail bank with a higher profitability. Both the things are possible. So this statement is also false. So the answer is only first. Profitability is correlated with the balance sheet size only. Okay. So that is a correct answer among these three. Okay. Move on. Majority of the banks that clock high ROA. What is ROA? Return on assets. A return on assets. That is ROA. Okay. This you have it in your chapter number 3 in RBWM. Branch profitability. So majority of the banks that clock in high ROAs are dash sized. Means return on assets. Okay. See here, we are not talking here of profits. We are talking of return on assets. So which banks will be having higher return on assets? Okay, so return on assets will be higher when you have lesser number of assets. See here, return on assets means what I am getting as a return, income, okay, or profit. Let's say simple term profit upon assets. So when will this figure be higher? This figure will be greater if my profits are big or my assets are less. If I am having lesser assets, then also this figure will be bigger. So where the assets are less, high, big, small, and all of the above. The banks which are small sized will have higher ROA. Simple, isn't it? The banks with smaller size will definitely have higher ROA. Ranking of the banks operating in India is based on the magnitude of ROA. Okay. It shows that there are only 2 large banks present among the top 10. So obviously large banks will be lesser because they have huge assets, right? Majority of the banks that clock that higher ROAs will be of small size, isn't it? While foreign banks clock the highest ROA, the largest category representation is from the Indian private sector banks. Old private sector banks, although typically old private sector banks although typically smaller than the new private sector banks, have equal representation at par with the latter on the ROA scale. Means all old private sector banks are also coming up the ladder. They are also competing with the new private sector banks. This is possibly the result of rapid modernization effort. Modernization means more technology oriented. Okay, we are moving more towards technology. As we move more towards the technology, what happens? Our assets reduce. Okay, so our assets will reduce means what? We'll have lesser people, we'll have more computers. So in that case your ROA will increase. Okay, that's why it is small size. As the assets decrease, as the technology increases, the ROA of any bank will definitely go on increasing. Got it? Simple. A dash framework will translate organizational strategy into appropriate functional level goals, which can be tracked and monitored at the right levels and a frequency to deliver predictable improvement in metrics like ROA and thereby the valuations. What do you mean by this? Dash framework will translate organizational strategy into appropriate functional level goals. Functional level goals means what? Say this, functional. It means function. What is a function? Let's see this. In any bank, there can be various functions. There can be a retail asset, retail. Then there can be corporate. There can be treasury. It can have, these are all called as separate functions. Okay. So the profit of any bank will be dependent on the combined profit of all these. It can be many. See here, I'm just writing 3. There can be many. Okay. Investment banking, there can be thousands of bankings. So functional level goals, appropriate functional level goals, which can be tracked and monitored at right levels. At right levels means I can focus on retail separately, corporate separately, treasury separately, and others separately. To deliver predictable improvement in the metrics. Metrics means what? It is a standard. It is a standard of measurement. Means I'll keep a benchmark. Metrics means I'll keep a benchmark that this and this should be my net profit from all these, each one. Okay, XYZ. Let's say XYZ amount. It can be different for retail, it can be different for corporate, it can be different for treasury. Means it depends on your earlier history. So if my retail banking is earning huge profits, the benchmark for retail will be higher. Or similarly, the vice versa for treasury, it can be lower, depending on what is my historical this profit, right? So thereby the valuation. So what is this framework now? Now you have got this question, the meaning of these lines. So what is this framework? Profitability based performance management, business based performance management, revenue based performance management, and asset based performance management. So what will increase my overall net profitability and at a functional level also? Logically you can think over it. The answer will be profitability, isn't it? If I'm focusing on profitability, only then my overall functions will also focus on the profit. It all depends on the top level. If my top level board of directors are focusing on profits, all the employees of the bank will focus on profits. If my top level focus on only business without focusing on profits, here there can be a business which is huge or revenue. There can be a company who is having huge revenue. Revenue means sales, but lesser profits. In retail, let's say in this retail FMCG products, FMCG, like Hindustan Lever or all this, right? In those products, if you see, the revenue is huge, but the margins are less, right? Asset-based performance management. So the company should always focus on profitability-based performance management. Okay. So that is the right answer. Got it, everyone? Clear? See here, if you don't have profits, what's the use of your sales? Simple. I'll ask you a simple question. If my company is having a huge sales, but the profits are nil, I'm selling just that Lay's or Coca-Cola or this Pepsi. What is the margin I am getting? Almost nil. It's 0.5 paise. So why should I do this business? Isn't it? I'll always try to do the business wherever I'm getting higher profits. Isn't it? Got it? Move on. This is a big one. To improve the ROA, or ROA means return on assets, and reduce variability in the performance, banks need to take, it's a sort of case study. Banks need to take a forward-looking windshield-based approach to performance management rather than backward-looking rear-view mirror-based one. This would include which of the following? Now, what do I mean by this? See, the basic question over here is, we have to increase our ROA, return on assets. Okay, so we have to increase our ROA. That's simple. And reduce variability means, suppose if 1 year I am getting the profit of 10 lakhs, next year I must get the profit of either 11 or 9 or 12 or 8, but not more than 20% difference. That is known as variability. Banks need to take a forward-looking means future-looking approach, rather than a backward-looking means just looking at the history of mine or profitability of mine in last 10 years or last 5 years. Rather than looking at this, how can I do something out of the box and focus so that I can have higher ROA than whatever I have achieved earlier. So what are the following methods? This would include which of the following? Clear business and financial model across its portfolio of business products to create a roadmap for ROA improvement. So clear business and financial model means all the elements of my bank, including the board of directors, including the mid management, top management, lower management, everyone should be clear in their business focus. They must know where the profit is, where the profit isn't. Financial model across its portfolio of the business to create the roadmap of ROA improvement. So ROA improvement is an important part. Everyone has to focus on ROA improvement. There are two terms. One is ROA and second is ROE, return on assets, return on equity. Slight difference is that there's the difference of leverage. That will cover whenever the topic comes. Second is strong framework and planning cell in the CFO's office that translates growth, price, profit and capital improvement initiatives into plans and budgets. So what do you mean by this? Strong framework and planning cell. So there should be a strong framework at the top level. Planning should be done at the top level very strongly at the minutest level. What do you mean by strong planning? Strong planning here means whenever I plan sitting in the CEO or CFO's office, okay, I must understand what the lowest level person will be doing. If I implement some strategy, I must understand that. If I understand that, only then will I be focused correctly on my clear goals of profitability and ROI. Okay. So that translates growth, pricing, profit and capital improvement initiatives into plans and budgets. So what are the plans and budgets means what? This is generally the lowest level of planning. Okay. Planning always starts with purpose, means this, then objective, then strategy, then plans. In fact, there are principles in between, principles, right? Then plans, then budgets. Like this, if the planning hierarchy of planning says that. Next is periodic review and report and review mechanism that distinguishes between routine operational plans and strategic growth plans. Effectively tracks budget variance and converts them into actionable items. So what do you mean by this? Periodic report. A report means I must get a periodic feedback of what is happening. Periodic feedback is very necessary. Periodic feedback and a review mechanism, right? That distinguishes from routine operational plans and strategic growth plans. Here, there are two types of plans. One is daily, day-to-day working, operational, and second is long-term, strategic. Okay, I'll give you a simple example. In strategic, what happens? Do you know the phone Nokia? How many of you remember Nokia now? You might be knowing the name at least, huh? All of us had Nokia phones in 2004 to 2008, roughly in that age, that period, right? Where is Nokia now? Is there a Nokia phone? Does anyone of you have a Nokia phone now? Except as an old phone or the antique piece. Other than that, nobody uses it, right? So, strategic growth. They didn't see the strategy. Android was coming up and Nokia didn't focus on strategy. So, the point over here is we have to separate the day-to-day plans, operational plans from the strategic growth plans. Okay, we have to separate the day-to-day working from the strategy and effectively track budget variance and converts them into actionable items. So my budget variance means how, suppose if this year I am having a profit of 10 lakhs, next year if I am having the profit of 11 lakhs, so that is called as variance, change. Converts them into actionable items, means actionable means how to get that profit. So what will be the answer in this? This would include which of the following? Clear business focus, right planning and review mechanism. So answer will be D, all of the above. Don't you think so? Isn't it? All of the above will be the answer over here. Getting this? Everyone okay with this? Got it? Shall I move on now? Business models of retail banking are being drawn based on various aspects. In this context, which of the following aspects is incorrect? So business models are drawn on various aspects. Now what are the business models? See here, there are two things. One is business approach and second is business model. Always remember this. Okay. There are two things in your RBWM. Business approach. Okay. Approach means it is SBU, departmental approach, integrated approach, that is approach. And models means there are four models. Okay, which are the models? Four models: horizontally organized, vertically organized, predominantly horizontal, predominantly vertical. So now we are talking of these models. So the models of this retail banking are being based on various aspects. In context of which, in this context, which of the following is correct? Is incorrect, sorry. Look at the question. See here, very important thing in your RBWM paper. Focus, what do they want? They want correct or incorrect. You will save at least, I'll say 5 to 6 marks, at least. More than that, roughly 10 marks you will save if you see the question correctly. Many a times what happens, we know the answer, but we don't see what is asked. It is asked incorrect, and we say correct, and we tick the correct one. Focus. What is the question? So they want incorrect. Product, capacity, delivery channels, and technology. So what is it based on? All your business models are based on what? What can be the basics? Okay. Think over it. I'll give you half a minute. Yeah, half a minute is okay. I'll give you half a minute. Everyone think over it. What do you think? Should it be product? Should it be capacity, delivery channel, or technology? Everything is confusing. We feel all are correct. So which one is wrong? So the point over here is always understand what is capacity. Okay, what is product? Product means what basically? Product means what products you are having. Means not a single product. It can be multiple products. So what products do you have? So obviously it will depend on it. I'll come to capacity later. Delivery channels. What are the various delivery channels available? Is your delivery channel only branch banking, or is it internet banking, ATMs, or social media banking? So what are you doing? Which is your delivery channel? And last one, which is your technology? What is the level of your technology? Some banks might be lagging in the technology. Some banks might be advanced. To achieve the marketing share of the banks through retail banking, bank has to adopt various strategies and models. Increase the alternative delivery channels as much as possible. Now I'll come to the capacity parts here. This is always vice versa. Means this model is not dependent on capacity. Remember, model is dependency. I'll write dependent over here. Dependent. Okay. So model dependent on capacity. So that is not the case. That is wrong. That is reverse. Actually, it's reverse. Your capacity should be dependent on the model. First, your business model is decided, and then based on that, we hire the human being. Okay, right? So model will never be based on your capacity. Capacity will be based on the model. I have to change my capacity as per my model. Got it? So the answer is B. Incorrect. Parabanking means, now there are various words to this parabanking. Okay, it's called as ancillary banking. Ancillary. What are the other words? Anyone? Ancillary means selling other products than the banks. Selling other products than the banking. What are the banking products? Saving current, FD loans, right? LCs sometimes. Mainly these 5-6 products only. So what is parabanking then? Parabanking means selling the products which are not of the bank. So now let's look at the option. Selling the products of hiring locker cabinets, selling mutual funds, selling life insurance covers, and both B and C. So what is parabanking now? Yes. Is selling lockers also the parabanking? Selling lockers. Now I'm going to tell you the difference between parabanking and ancillary services. See this. There is a slight difference between this word parabanking and ancillary. Slight. Almost 90% it's same, but slight difference. What is that? See this. Firstly, the answer for this question is what? Parabanking means. Let me see in the comment section. What is the answer? Answer is D. Both B and C. Okay. Selling mutual fund and insurance. Then you'll say, what is locker? Locker is also not a banking product actually. But selling locker is not a parabanking. Selling locker is an ancillary service. So that's why I said 80-90% they are same. Slight difference is there. Okay. So parabanking means selling these mutual funds, insurances, these wealth products. And ancillary means it includes everything. Mutual fund, life insurance, hiring lockers. Okay, some godowns also some banks are having. That is also an ancillary service. Okay. So understand the difference between para and ancillary. See this, para activities means, para banking activities means for making additional that is for basically marketing purpose, means profit making purpose, and increasing its business portfolio. These activities can range from portfolio management services, means parabanking I'm talking of, from insurance, mutual fund, PMS, portfolio management services, and this PSU bonds, selling of bonds, that can also be the parabanking service. So parabanking basically refers to selling third party products. Simple, isn't it? Okay, move on. Which of the following is or not the value added services offered with ATM debit cards in retail banking? Not. Remember, again I am telling you, focus on the question. You want the false one, not the true one. Built-in accident insurance as a group facility. Here, value added services with offered with the ATM debit card. Means you buy my debit card, I will give you this. So built-in accident insurance policy, insurance as a group policy, add-on life health cover, mutual fund investment. So which of them is not given? Accidental insurance, nowadays it's given. What do you say? Is nowadays accidental insurance? Okay, what does your bank follow? You tell me, what does your bank follow? Does your bank follow anything of this or no? You can clearly mention. Don't mention the name of the bank, but you can directly mention this at least. That does your bank follow any of this? Means adding an, you buy my debit card and I will give you some insurance, health insurance, or I'll give you some life health insurance, accident insurance, anything. Does your bank follow this? This is known as this. There are various levels of products. I've covered this in other series also. Core product, augmented product, right? And then expected product, all this. So this is basically your augmented product where you give the value added services. So which of them is not over here? Not. Yeah. Generally, I'll tell you, what do we give in free? What do we give in free is this, what accident insurance and health insurance. Mutual fund investments can never be given as a value-added services. What will, how will you give this investment? You means you are going to invest in on the basis of that customer. So this can't be done. So which of them is not? Not is basically 3 only. Where is 3? A. Look at this, option A. Right? Firstly, what do you understand? Understand this concept. This concept is value-added services we are talking of. So we are adding some other services to the debit cards. Now this can be to this debit card also. This can be to something else also. See here, I can offer the same accident insurance and health insurance. If you buy a FD with me, I can offer. What's the problem? I can offer this health insurance and accident insurance if you buy a loan from me. So whichever product I am not means I want to sell, I want to focus more. That product I'll add all these add-on features, right? So that's the basic logic. It's not compulsory that it is added to debit card and ATM card only. It can be added to any, whatever you have to sell. You'll try to lure the customer. Lure means come here, I'm giving something extra, right? Which of the following are the services offered by the public sector banks? So public sector banks offer which services? Corporate agency of life and non-life, distribution of mutual funds, then what is next? Yeah, bill payment services, wealth management services, and PMS, portfolio management services. Public sector banks. What have you seen in your branch? Tell me simple. What have you seen in your branch? Do you sell PMS in your branch? Yeah, do you sell PMS in your branch? I don't think so. Portfolio management. See here, portfolio management is a private banking concept. Private banking. Now, what is the private banking? Don't consider private banking like that of this actual private bank like HDFC, ICICI. It's not that. Private banking can be done in PSBs also. There, what do we do? We sell this PMS services. Portfolio means you invest 50 lakhs with me and I'll give you some returns of guarantee some returns, not guarantee actually. I'll try to get the returns of around 20%. So that is PMS. Okay. So which one is it offered in the branches now? Retail banking or PSBs? What have you seen in your banks? Mainly this is I have seen in private banks of HDFC and ICICI. Okay, this PMS and wealth also, wealth management. These two topics are generally in private banks. Private. Okay. So this nationalized banks offer these three: corporate agency of life and non-life, distribution of MF, and bill payment services. So it will be 1, 2, and 3. Okay. WMS means wealth management services, and this PMS. These are generally offered in private banking for HNI customers. Okay. Even now in nationalized banks also they have started a bit, but that's a bit. They have not started to go full-fledged on this. Okay. Yeah. Chalo. Next one. Now there are 3 questions now which are almost of the same nature. In fact, one question is divided into 3. Let's see. Match the different financial stages of retirement. So basically financial stages, not retirement, of life you can say. Which are the match the 3 financial stages. Keep it simple. Accumulation. This stage is more concerned with maintaining the existing growth than achieving the new heights. Number 1. Number 2. When one can go for bold investments and set aside fixed amount for investment and premiums. During this phase, the efforts one has to put in over the years to build a retirement fund and other investments will finally pay off. So what do you think should be the correct answer? Means what is this accumulation phase in your life? Not only in your life, in RBWM, to be frank here. Let's focus on JAIIB only, RBWM. Which is the accumulation phase? What can be the qualities of this accumulation phase? Maintaining existing growth, or one can go for bold investments? Definitely not this one. Third one, retirement, is not the answer, right? So 1 or 2. Think over it. There are 3 stages always in the life of any human being. 3 stages. One is accumulation, second is transition, and third is that distribution, means distribute the wealth. So these are the 3 stages: accumulation, transition, and distribution. Accumulation means initial stage, roughly around the age of 30, 35 max, 35 max. I go on collecting the money because I'm newly in the job and I'm getting some salary. So I'll go on collecting the money, starting new EMIs, starting new SIPs, okay, or buying a new flat. Of course, not buying a big bike or big car. That is wrong. That's not an investment phase or accumulation. That's a expenditure. Okay. So what can be the answer over here? Maintaining existing growth, or because there is no growth, how can you maintain the existing growth? In accumulation phase, you are in the initial stage. So the answer will be 2. When one can go for bold investments, right? You are young, you can go for bigger bold investments and set aside a fixed amount for investment and premiums, right? Got it? So that is 1. Second, now it is divided. What did I say? Transition. Transition means what? Of course, again, retirement is gone. So now this is gone. So only one remains. The stage is more concerned with maintaining the existing growth than achieving, isn't it? Don't you think so? It is right. What do we do in our life also? You see, in our life, there's 3 stages: accumulation first, then transition, and then last one is distribution, right? In the initial years, what do? We try to collect the money, collect as much as possible from job or from anything. In transition, we have in this phase, what happens? We have our family, right? This phase we don't have a family, or either just married. Here the children are growing up. So here you are required to maintain the life so that you can see the expenses and invest for the future also. So concerned with maintaining the existing growth than achieving the new heights, right? Even in your career also, you see same thing. In the initial years, you are always trying to, I'll go this, I'll do that, I'll become the general manager, I'll become the zonal manager. Then by the time your family starts, you become the age of 35, 40. Then you say, forget general manager. I'll try to become the manager. Okay. So after that, after 40, then you say, okay, let it be. I don't want any promotion. Let it carry on, whatever is going on. Many things, many times this happens. Okay. So this is known as this transition phase. Okay. One second. So this is the right answer. Now third one is obviously, you know it now, distribution phase. During this phase, efforts one has put in over years to build a retirement fund, and other investment will finally pay off, isn't it? So this person has got the money now. He is using his money. He or she is using his money, and distribution means what? Putting some corpus for the future generations. Means, of course, after you or anyone dies, or anyone basically dies, this money will be here only, right? So you have to leave it, and leave it properly, so that your next generation doesn't fight with each other for the property. Okay. So that is distribution phase. Got it? Dash has a direct impact on wealth creation. Select the most appropriate. Direct impact. Which one will impact your wealth, your money? Inflation, interest rate, TDS, and deposit rate. Which one will affect your wealth? Now I'll tell you. Many of you might be thinking, sir, all are correct. Interest, inflation, TDS, deposit, everything is correct. So in exam, if you get an option E, all of the above, all, or you get one of them you don't get, and you just get D, all of the above. So tick that. But if you don't have this option, you have to choose among these. Then you have to choose which one is the most appropriate or most affecting. Of course, deposit rate will affect. If you have less deposit rate, you'll get less money at the end. TDS, if you have higher TDS rate, higher tax goes, then you'll receive less money at the end. Interest rate of the FD, right? But important is inflation. That's why I said you have to select the most appropriate one. So inflation rate is the most important point that will affect your wealth creation. If inflation is high, your wealth will go down. Okay. Consider the following statements and choose the correct answer. Choose the correct ones here. Again, focus on the question. True, correct one. Implementation of CRM in business requires no technological upgradation. No. Is it so? What is CRM? Customer Relationship Management. CRM is a software. Remember, CRM is a software. Okay. It requires your technology to be changed. So no technological upgradation, that is totally, now you think it's wrong or right. CRM tools with marketing automation capabilities can automate repetitive tasks to enhance marketing efforts to the customers at a different point of life cycle. So what does the CRM software do? Whatever is repetitive, that will be given to the machine by this software, so that you are free to do the sales and speak to the client. So which one of them is true? Is one correct or is two correct? Just type in the comment section 1 or 2. Which one of them is true, or both are correct? You can write both also. The answer is this is true. So this is false, because it will require a technological upgradation. So this is true. In exam, they'll give you the options: A, both 1 and 2, B, something only 1, C, only 2, then neither, all these things. Okay. So you should, once you know the answer, then things are easy, isn't it? Got it? Next one. The compensation for DSAs will be basically depend upon, compensation means the fees paid to the DSAs, volumes of the accounts, volumes of the private banks, volumes of resources working in the bank, volumes of the business sourced. So it will be based on what? What are DSAs dependent on? DSAs are external bodies, right? They are not the bank employees. So DSS, nowadays in our nationalized banks we have BCs also, business correspondent. What is BC? Same, right? So DSS are external bodies. The compensation of DSS will basically depend upon what? Of course, volume of private banks is out. Volumes of resources working in the bank means all your employees. Nothing to do with this. Yeah, you might have 1,000 employees, but DSA will say what is the market practice going on. So these two are out. Volume of accounts and volume of business sourced. Obviously, the answer will be this now. Volume of business sourced. Okay, got it? Chalo, now we'll move on to some other difficult questions. Level of difficulty will now go on increasing. Okay, so in the same bracket, same means wealth and this marketing only. So let's move on to that now. Okay, see this first one. Among the below given, which of the following is are correctly matched on the basis of organized model? Now, organized model of banking we are calling it. Okay, so organized model of banking. Okay, so what are the options? Look at it. Horizontally organized model. Functionality is provided across all the products. In this model, customer information is centralized. Now we want which are correctly matched. Okay, vertically organized model. Individual processes platforms support one product only. Predominantly horizontally organized models. Customer data integration is not available to certain extent for other products. Predominantly vertically organized model. A hybrid model that offers common information for most of the related services. So, which is the correct one in this? Think over it. Now, firstly, you must understand what is horizontally organized, what is vertically organized, what is PH, predominantly horizontally, and what is PV, predominantly vertically. So, what is it? We must understand that. Okay. So, for that, first, I'll show you what is horizontally organized. Okay. Horizontally organized means basically here we are talking of the model which is related to product only. Related to product only. Mainly remember this. It is related to product only. Okay. Vertically organized. Here it is common data across all the products. Common data and it is customer wise. Okay. Across all the products, customer wise. Okay. Similarly, this predominantly horizontal means almost majority of the data is not shared with each other. Predominantly horizontal, and predominantly vertical means majority of the data is shared with each other. That is predominantly horizontal, vertical, predominantly horizontal and predominantly vertical model in the banks. Okay. So this is these are the models used in all the banks nowadays. Now see here, what has happened is banks have actually shifted from horizontal to vertical models now. Okay. So yeah, models. Let me see if I'm having this. Let me see models. Okay. So they have shifted now from horizontal model to vertical model. All the banks means the same case means the customer database is nowadays centralized, unified. Okay. So now which is correctly matched over here? Just now I told you what is horizontal. Horizontal means related to one product only. So is this the answer? Functionality is provided across all the products. So that is wrong. This answer is right for vertically organized model. So this is wrong. Okay. Individual process platform supports one product only. Now this is also wrong for vertically model. See here, it should be reverse. This should come over here. Okay, and this should go over here. Means horizontal. Okay. Predominantly horizontally organized. Customer data integration is not available to certain extent for other products. And vertically organized, a hybrid model that offers common information for most of the related services. So what did I say about vertically? Almost 75% is vertically model, means 75% is centralized. Here it is 100% is centralized in vertically. So is this matching a hybrid model that offers common information to for most of the related services? So that is true. So that's why the answer over here will be D, true. Because it matches here. 75% means what? Almost all the products, right? So the answer is D over here. Importantly, let me see this, give you in detail. Horizontally organized model in means what? Individual process platforms support only one product in horizontally. The subdata in the model are not shared with the other products in horizontally organized or other product platforms. Vertically organized means functionality is provided across all the products. In this model, customer information is centralized. Centralized customer information builds common origination and servicing processes across all its retail banking products. Remember the sentences which I am telling you. In the exam, they will be asked. PH means predominantly horizontally. So that model. Some modularization within the product oriented feedback. So some modularization is done, means some centralization has started. Customer data integration is available to certain extent to other products also. Okay. And PV, predominantly vertically organized, means is a hybrid model that offers common information across almost all the products. Almost. Okay. Next one. Which one of the following statement is correct in respect of the product cycle? Product cycle. Now what is PLC firstly? Product life cycle. You can call it product life cycle. What is product life cycle? Yes. What are the stages in product life cycle? Let me show you. Say this. I'll show you directly on Google. Okay. See this, product life cycle. Are you able to see this? Yeah. Let me take it above. So now it'll be easy for you. Yeah. Now you're able to see this. See this. There are 4 stages in this: introduction, growth, maturity, and decline. Introduction means what? In this, in this stage, you are introducing the product. So you have to spend more. People are not knowing that product. So you will have to spend more in your advertisement. Next is growth. Growth phase means here the product has already started taking the grip. People are coming to have come to know about the product. So here the product will start earning profits for you or earning revenue. Next is maturity. Maturity means what? Here the product is at the peak. Means here the sales are maximum and even the profits are maximum. And last one is decline. Here people have started rejecting your product. So it is decline over here. Okay. So this is basically the PLC. Okay. So coming back to our question now. Look at this. So which of the following is correct with respect to the PLC? Okay, correct. In the introduction stage of a product, the sales volume will be low and revenue for the products will not be sufficient to cover the cost of producing, marketing, servicing. So in the introduction phase, what happens? The sales is less. Just now we saw this. It is less. So it won't cover the expenses actually. So you'll have to put it from your own pocket. In growth stage, which is the second stage, the sales volume remains stagnant. Is this stagnant? What did we see? It is growing this, right? This was the introduction. This was growth, then maturity, then decline, right? So here it is growing. So this is wrong. In maturity stage, there is more growth or sales and sales volume peak. So there is more growth. So is it the same? And sales volume peak. See, the sales volume are peaking. Peaking means end. It won't go beyond this. So is this the case? So what can be the answer? Is it 1 only, 2 and 3 only, 1 and 3 only? 1, 2 and 3 above means all of them. So what can be the answer over here? The answer is correct. 1 and 3 only. Okay. 1 and 3 only. Got it? So this is the answer C. 1 and 3 only, because both of them are correct. In introduction phase, you don't have enough money. You means the product does not generate enough money. You have to put it from your own pocket. And in maturity phase, the volume peaks, sales volume are peaking. Okay, got it? Next one. The suitability of a business model or approach of a bank depends upon, means which business model should I use? What do you mean by business model? Horizontally organized, vertically organized, just now what we saw, that one. Or approach is different. There are two things. One is model, second is approach. Okay, approach will cover whenever the topic comes. So it depends on what? Corporate strategy, business objective, business mix, and all of them. So what does it depend upon? Yeah, it depends upon, isn't it? All of the above. Don't you think so? All of the above. Because what is here? Firstly, let's see one by one. What is corporate strategy? Corporate strategy means what is my board of directors thinking? See, this corporate strategy will be always decided by corporate strategy. Okay, I'll just write a short form now. Strategy that is decided by board of directors, BOD. What do they think about the business going on? Where they want to take the business? Okay, what is the objective of theirs? So it depends on that. Business objective means again it comes from the board of directors. What should be my final aim? Where should I go? My business go. Otherwise, what happens? The example of Nokia phones. 2008, everyone had Nokia phones. 2005, 6, 7, 8. Today, no Nokia phones. Why? Because lack of business objectives, lack of corporate strategy. Business mix means what all products I am having. Business mix means, look at this. Very simple example is in the banks. Banks, we are having all the types of products, financial products. We are having savings, we are having current for those who are doing business, for savings for the savior, means those who are in just saving, not investing, right? FD, some higher returns, mutual funds, some higher returns, locker, safety. So this is known as business mix. Various products which combine together to form the business are known as business mix. So what will be the answer in this then? It will be all of the above. So business model will depend upon what are my all the three things: corporate strategy, business objective, and business mix. Okay, all the three. Got it? Next, a business model followed by the banks for retail banks is. So what is the business model followed by the banks? Okay, SBU approach, departmental approach, integrated approach, and any one of the above, or you can call it all of the above. Simple is anyone. Okay, let's say it anyone. So which is the model followed by the retail banks? In fact, the model word is not right over here. It should be approach. Yeah, approach model. It is approach, because I just now told you whenever the approach comes, we'll focus on this. So this is known as approach. Okay. So which approach is followed by the banks? Firstly, okay, I'll give you some explanations for this. SBU. SBU means what? In my own bank or my branch, my expenses should be covered. Look at this sentence. Expenses should be covered. Should be covered from my income of the branch. From income of the branch. That is known as SBU approach. Means my income should cover my expenses. That's the basic thing. Okay. Nobody else will come to help me. Each unit is a separate unit. They have to cover their own expenses and their own incomes. Departmental means what? What we follow in our nationalized banks. Here, this model is followed in private banks. New private banks, not old private banks. Okay, new private banks and foreign banks. New private and foreign banks. They consider every branch as a SBU approach. Okay. Departmental approach. Departmental means saving department, current department, loan department. So this we follow it in our nationalized banks. Integrated approach. This is followed in small businesses, small banks, small businesses. Okay, small business means what? What is this integrated approach? Here it means everyone will do all the jobs. Getting this? Everyone will do all the jobs means in smaller business you see in smaller businesses the same person does the job of the clerical also, same person does the job of the sales also, same person does the many times does the job of production also. So that is integrated approach. So which model is followed by the retail banks? So any of the above is the answer. Why? Because it depends on which bank are you talking of. Are we talking of specifically nationalized banks? Are we talking of specifically private sector banks? No, we are talking of all the banks, retail banks. It can be a cooperative bank also. Cooperative bank may follow integrated approach, right? So the answer is any one of the above. Cost of banking product is rupees 1000 with a markup of 25% on the total cost. The selling price will be so easy, isn't it? What will be the selling price? Cost is 1000, markup of 25% means what? This is here, this is my CP, 1000 CP plus profit equals to SP. That is the basic logic of any business. So CP is 1000. Now SP profit is what? 25%. So 25% of 1000. So it will be 250, right? So my selling price will be 1250. Okay, so this is the answer. So that one was easy. I'll give you a reverse problem that is difficult. Selling price is SP equals to 1500 with a markup of okay, markup of let's say 30%. Now you give me the cost price. Selling price is 1500, markup of 30%. Now you give me the cost price. Now this is difficult. It's not that simple because here C plus P equals to selling price. Okay, so this is 1500. Markup is on what? 30% markup on what? Is it on selling price? Many of you will be taking this on 1500. That is wrong because markup is always on CP, on cost price. But do you know the cost price? No. So you'll take this as X. So now this will be what? 0.3x, 30%, right? 0.3x equals to 1500. Now you are on the right track. Okay, x 0.3x, then 1500. Markup is never on the selling price. Markup is always on the cost price. So now it will be 1.3x. That's why I said this is a difficult problem. This is not that simple. 1500. Now x will be what then? Divided, isn't it? X equals to 1500 divided by 1.3. So what is the answer now? Get it, everyone? What is the answer you are getting? Everyone type comment section. Everyone in the comment section. 1500 divided by 1.3. So you're getting it as 1153. Okay, so this is my cost price. 1153. This is my cost price. Okay, that's why I said this was very easy. First one. This is difficult, isn't it? Difficult problem is over here, and in exam they'll ask you these difficult problems. This one, if they ask you this is then it's your good luck, isn't it? Among the following, which of the following is correct about the below given statement? So we want which one is correct. See here, first is statement given, assertion, and second is the reason given. Now we have to see whether the statement and the reason are correct, matching each other. NBFCs have also aggressively entered in the bottom of the pyramid segment, posing a threat to the conventional banking players. So they have entered the bottom of the pyramid, means they are targeting the lower category. Reason: factors like growing urban population, higher disposable income, rise in young population are the main reasons for emergence of the corporate banking in India. So these are the main reasons for the emergence of corporate banking in India. Okay, so are both of them correct? Reasons as well as the assertion? Are both of them correct, or are both of them matching? That is the important part. Are both of them matching? So they are not matching over here. Why are they not matching? Here the reason is talking of corporate banking. Here we are talking of retail banking. So these two are totally different, isn't it? So the answer is A is correct and B is incorrect. This is reason is incorrect. Okay, R. Sorry. Assertion is correct and the reason is incorrect. Okay, got it? Because if I'm saying, if I'm talking of this pyramid, it means I'm talking about a retail banking, and here you are giving me the reason of corporate banking. Okay, so that's why this is wrong. Reasons for emergence of retail banking business in India, that is strong economic fundamentals, growing urban population. These are the reasons for growing retail banking, not the corporate banking. Higher disposable income, rise in the young population, emergence in the new customers, rise in the mass affluent space. These are the reasons for growth of retail banking. Hence, the statement given in the reason is not correct. That it is saying that it's for corporate banking. So that is wrong, right? So that is the main point. Got it? NBFCs means, what are NBFCs? Basically, non-banking finance companies. What are those? NBFCs are we call it para banking. They do the job of para banking. Means nowadays they do the job of banking only. They are giving this loans also and taking the deposits in form of CDs. So NBFCs have also aggressively entered in the bottom of the pyramid segment, posing a threat to the normal banking channel, isn't it? Got it, everyone? Mr. Augustine is trying to get an exemption of 2 lakhs under the category of exemption of sale of housing property on reinvesting in specific bonds. Among the following, under which of the following section can he apply for the same? What is the exact question over here? See, the exact question is, we are talking over here of capital gains. Capital gains tax. See here, means what? Firstly, understand what is capital gains tax. Suppose if I am selling a housing property, okay, housing property means it requires 2 years house. Suppose if I am selling this property after 2 years, then I'll have capital gains tax. Okay, long term capital gains tax, and that also with indexation. So I'll do all that in indexation and reduce my increase my purchase price as per that indexation cost, and then I'll sell it. Now, how to do this? There is a separate formula for this. There is a separate numerical for this. Okay, this numerical will take it whenever it comes. Right now, it will take a lot of time. So what am I doing over here? I'm selling this flat or any house, and then I'm gaining something. I'm making the profit. So this profit is known as capital gains. This profit equals to capital gains. Capital. Okay. So what do I do on this capital gains? I have to pay the capital gains tax of 20% plus GST. Okay. So 20% tax I have to pay. Now this tax compulsorily I have to pay. Now if I have to avoid this and I want to save this tax, then I have to invest in certain specific bonds. Which are those bonds? For example, like REC. REC gives few bonds. REC means Rural Electrification Corporation. That gives you the bonds. If you invest in that, similarly SIDBI gives. SIDBI. Similarly, nowadays NHAI also gives. NHAI, National Highway Authority. They also give the bonds. So you can invest in any of these bonds, and then you don't have to pay this 20% tax. Now the question over here is, this investment under these bonds is under which section? 54F, EC, 56 and 7. So that is the real question. So this is relating to capital gains, remember. Capital gains tax. Okay. So what is the answer then? Yeah, everyone? The answer is, okay, let me first explain you all these sections. Okay, 54F, that is for capital gains on the sale of any asset other than housing property. Okay, so 54F is for that, any asset other than housing property. Okay, 54EC, exemption on sale of housing property on reinvesting in specific bond sections. Okay, so this is for EC. Remember, now From this you can judge the answer. Okay. 56 income tax taxable on incomes taxable only in case of income from other sources. Now this has nothing to do with your capital gains. This is simple. 56 section is under this income tax normal ITR which we file from other sources. 57 expenditure allowed as deductions. So this has also nothing to do with capital gains. So now the problem is between 54F and EC only. So what is the answer now? 54F, what did we say? Any asset other than housing. So 54F, what are we selling over here? Here we are selling that house, na house property. So F won't be existing. So answer is B, EC. Correct? EC is specifically for that exemption of sale of on sale of housing property on reinvesting in specific bonds. That is the thing, isn't it? Got it? Mr. Arnav is trying to get an exemption of rupees 1 lakh under the category of exemption on capital gains on sale of any asset other than housing property. Say this now, any asset other than housing. Now you'll get it immediately, isn't it? Now even I need not explain you. Among the following, which of the following sections does it follow? So I need not even explain you now. What is the answer? Just now I give you the all these answers, right? So what is the answer over here? Yeah. Fast. What is the answer? Right? 54F. Just now we saw it, na? 54F is for any property other than housing. EC is for housing and investing in specific bonds. Okay? So 54F is the answer. Simple one, isn't it? And 1 lakh, okay? 1 lakh, so rupees 1 lakh under the category. Now this 1 lakh is having one very important point, but this is only for shares. If I am selling the shares, understand this, if I am selling the shares in long-term capital gains, and if the long-term capital gains are less than 1 lakh, then I need not pay any tax. Important point, okay? Next one. Deepali got a file from Mr. Tiwari. He has shown a deduction of 1.5 lakhs under 80CCC. Can you find Mr. Tiwari had deducted the amount from which of the following purposes? So 80CCC. Now only question is 80CCC is applicable for what? Insurance premium, pension contribution, house rent paid, expenditures allowed as deductions. So 80CCC is applicable for what? That's the basic question. 80CCC is applicable for what? Yeah. Now you have to remember all the sections of insurance. Yeah. 80CCC. What is it? Sure. Combined section is called as ATC, right? Complete section is called as ATC. Now this ATC is divided into various sections, subsections. These subsections are 80CCC, that is for insurance premium. 80CCD. Now I'm giving you others also. See this, I'll write it over here. 80CCC. 80CCC. It is for insurance premium. Okay, 80CCC is for insurance premium. Then CCD, I'll just write now CCD. Okay, it's not cafe coffee day. 80CCD, that is for pension. Okay, 80CCD is for pension contribution. Means pension premium which you make. Pension plans we have now. That pension plan, okay, pension premium you will call it, simple, okay, premium. Then there is one more section. What is that? 57. Okay, so section 57 is for expenditures allowed as deductions. Okay, expenditures allowed as deductions. So this D1, expenditures allowed as deduction. So this is D1, the D which we are having. So the answer over here will be insurance premium we are talking of. So A will be the answer. Okay, got it? Clear? Next one. In the balance sheet of Miss Yugali, there is an entry of deduction of 20,450 under 80GG. Can you find her that the CA had made a particular entry for which of the following clause? So 80GG is applicable for what? 80GG. That's the basic question. 80GG is applicable for interest on savings account, housing rent paid, interest on home loan and pension contributions. 80GG is applicable for what? The answer is 80GG you wanted, huh? 80GG. So it is applicable on house rent. Okay, house rent. House rent paid is for 80GG. Okay, what about these others? Interest on saving account, interest on home loan, pension. What are these? See here, for savings account it is, I'll write it over here only. Savings account, okay, it is 80 TTA. So many sections. So you need not remember all those. Huh? See here, this has come, that's why I'm telling you. It's not compulsory for you to remember all those. Because many of them are not asked to you in exam. Okay. Then what is the next one? Interest on home loans, right? Interest on home loans. So that is 80 EE. EE. Okay, and what is that last one? Pension. Pension already I've told you, na? 80D. Just now we gave this. What was that? Pension. Pension 80 CCD, right? 80 CCD. Okay, so that is the answer. Got it? So house rent paid is under this section 80GG. In balance sheet of Mr. Tiwari, okay, who is doing corresponding management degree in financial and wealth management, he has made a deduction of rupees 45,000 under section 80E. Okay, Mr. Vivek, who is the manager of the nationalized bank, is willing to know that he has made the deduction for which cause. So 80E we are talking of, 80E. Can you help Mr. Vivek that Mr. Tiwari has made the deduction for which of the following purposes? So the whole story short is, what is it? Section 80E for? Simple. Okay, and the amount is 45,000. Interest on education loan, pension contribution, exemption on capital gains on sale of any asset other than the housing property, exemption on sale of housing property on reinvesting in specific bonds. Now already we have seen many of these, right? So it's very easy for you to judge now, isn't it? So 80E will be for what? Simple, isn't it? Because we have seen this pension contribution is what? 80 CCD. 80 CCD. Why am I repeating this always? Because if by repeating it 3, 4, 5 times, it will get into your head permanently. Exemption for sale of any asset other than the housing property. Just now we saw it, right? This any asset other than this, here we wrote it, right? So any asset other than housing property, section 54F. So this is section 54F, 54. And what is this? Reinvesting in the bonds. That also just now we saw this, right? What was it? Deducted this, any asset, this first one. So it was 54 EC, right? So this is 54 EC. So now what remains? Education loan. So 80E is for education, interest on education loan. Okay. So that is the answer. That's it, isn't it? Move on. In the balance sheet of Mr. Madan, who is doing a job in Central Bank of India, okay, has decided to make an exemption of 1.5 lakhs under section 54F. Can you find that he has made the deduction for which of the following purpose? So basically 54F we have to talk. Pension, interest on education, capital gains from sale of any other asset, sale of housing property on reinvesting in specific bond. Just now I gave you the 54F. See this. Any asset other than housing property. So now give me the answer. 54F. What is the answer? Just now we saw it, isn't it? Okay, let's call one by one. Okay, 54F. Okay, hardly 1 minute has passed in this. So any asset other than the housing property. This is 54F. See here, I am repeating it many times. This is 54EC, right? For this reinvestment, right? Education loan 54E. And pension was something, what was that pension? 80 CCD. 80 CCD. Okay. So this 54F is for any asset other than the housing property. Among the below mentioned parent metric and their purposes, which of the following is correctly matched? So correctly matched. ROA, return on equity with a mitigated risk impact. ROA, fully risk based on profitability. Full risk based on profitability. ROE, GL, return on equity without risk impact. GL means actually it should be gross return. Okay, directly make it return, simple. Return on equity without risk impact. ROE, asset management without risk impact. So which one is correctly matched? Okay, correct one. Which one is correct now? Answer is correct one. We want only correct now. We don't want a wrong one. This needs explanation. I need to explain you certain things over here. Okay. So firstly, let me give you the answer. The answer is, which one is correct? ROE. Return on equity without risk impact. If I am having the risk impact, then ROE means risk adjusted return on equity. That is the meaning. So some explanation. ROA, return on asset. Okay, return on asset. What is this for? It is for asset management without risk impact. Okay, asset management without risk impact. ROE, okay, return on equity. Return on equity means return on equity without risk impact. Done. That was simple. ROE, return on equity with mitigated risk impact, means whatever premium I am paying, that will be subtracted from this ROE. Okay, what I mean by this? Already I have explained, I think so, somewhere. Okay, so ROE means return on equity whatever I am getting, and suppose if I am paying the premium of risk impact, some insurance. Okay, so that premium is subtracted from this return on equity. That is taken under ROE. There is one more point which is not given over here. Two more in fact. RAROC, is it mentioned somewhere? No. There is one more, RAROC, risk adjusted return on capital. Okay, so again the same logic, return on capital and then risk adjusted, the premium is subtracted from this. And there is one more, EVA, economic value addition. Okay, so fully risk based profit model. So value added means what is the value you are adding? This concept is used in GST. Whenever you pay GST, we always use the EVA concept. It's how much value have I added to certain product. Okay, that is based on that only. Got it? So economic value addition done. Next one. Among the below mentioned statements, which of the following is an incorrect statement in context of the branch profitability? You want now incorrect. Focus on this. Incorrect on branch profitability. A bank can use risk-adjusted profitability management to measure each branch's performance objectively, as well as the performance of its products, clients, and the business units. So can use what? Risk-adjusted profitability management. Okay. A bank can then make necessary adjustment to the pricing, service levels, product differentiation, market segments, and other factors. Mean this is step number 1A, then step number B. When income surpasses expenses, loss is realized. Income surpasses expenses. Okay. NPL, So provisioning ratio, coverage ratio, and cost of risk are the three measures that are most frequently used. So which one is incorrect? Very simple. Very simple. Anyone who doesn't know anything will also be able to answer this. Let me see what is the answer. Incorrect one. Incorrect. A bank uses risk-adjusted profitability management to measure each branch's performance. A bank can then make necessary adjustment to the pricing, service level, product difference. Means we'll make the adjustment later. When income is more than expenses, is it loss? So this is false. When income is more than expenses, it's always profit, right? NPL ratio, provisioning, coverage, and cost of risk are the three measures that are most frequently used, and that is true. These are used. Okay. Here. Okay. So what is the NPL ratio? All of you have seen this NPL. Nobody asked me the question. What is the NPL ratio? NPL is net non-performing loans. It is also called as NPA. Okay. Here, what is the measure of risk means risk management, profitability, risk management? What is this? You'll definitely, if you have more NPAs, you'll have lesser profitability. Very simple logic. Coverage ratio, cost, all these are used. So NPL was very important because we generally use the term NPA in the banks. Okay. So now, as I told you that I'll be showing you how to join the classes at the end, right? How to join? Okay, go to Adda 24/7. I'll always suggest you to go through the app. In the app, what happens? You get 1% extra. Okay, using the coin systems. So go to Adda 24/7. Click on JAIIB and CIB. Click on JAIIB. See this. JAIIB. Okay. This is the revision batch. If you can join this also for 2 days. Only for 2 days you can join it. Today, tomorrow, day after tomorrow, and 3 days. So there are ebooks available over here also. As I told you, you can join the Mahapeg also. Huge discounts are available. Okay. So you can join these. And if you want to join for the future batches, it's next sem. Okay. This coming May, June exam. That also you can join. Okay. Go to view all and you will get the batches over there. So don't miss this. And those who are all are planning for going for the, see this, these increment batches. Okay. Plus other batches. You see, go through the batches. All the batches you will get it. So go to the batches, join the new batches for the new semester. It's May, June. Okay. And huge discounts are going on right now. And firstly, follow my next marathon coming up. See here. Today was a mini marathon. Yesterday was a mini marathon. Tomorrow, mega marathon. Day after tomorrow, revision. Then after that, Chalisa. So don't miss. It's a pack event. Okay. Powerful event. So don't miss it. Okay. Best of luck.